So what I'm going to do for you today is just quickly run through these questions from past HSC exams. And what I've done for you sort of with the writing all over it is just gone through and given you some tips and tricks, and more so when there's two steps and what else needs to be included in these particular answers in order for you to actually answer them. So what I'd like you to do is, when you're finished yours, go through this and then you can see where you've gone wrong. Now, with question one, what does the expense ratio measure? It measures efficiency, because we know that the two efficiency ratios is your expense ratio and your accounts receivable turnover. Growth, profitability, and solvency. Growth doesn't have any formulas, but profitability does, and so does solvency. So make sure that you know which formulas go under which. Which of the following would improve the financial position of a business? Now, the answer here would be B or D, because one of the points that somebody made, and it made a lot of sense, is that if we're looking at the times, we want it to be higher, but if we're looking at the days, we want it to be lower. So this one was a little bit unclear in terms of how, how they're sort of explaining that. Now, question three, pretty easy for this one. Which of the following would be found on an income statement? What we have here is everything is on a balance sheet except for the gross profit. With this question here, now there's a couple of things that you need to understand, and when we're looking at this question, you need to make sure that you actually answer, or you find out what's the owner's equity, because for question 5, you're actually going to need it. And you have to make sure that you look at this additional information, because that's going to give you some hints on any figures that you need in particular. And then your industry averages, they give you the industry averages. And once again, you've got your formulas there, because you need those formulas in order for you to be able to work things out. And as I've said to you, they're going to give you the formulas that you need. So which of the following statements is true about liquidity for Kerry's warehouse? It is A. It is better than industry average and has improved since 2013. Now, the way we work that out is we go back up to the top here and we actually have a look at what are our current assets, what are our current liabilities, and then we work out our formula there. And we know what the industry average is, so then we can make a comparison between 2014 and 2013. Similarly, the same with question 5, you need to work out what owner's equity is. Now, we know that the formula is assets equals liabilities plus owner's equity. So if we know that and we've got those figures at the top, whatever's the difference between them is going to be the owner's equity. So with this question here, the table shows extracts from financial statements from 2014 and 2015. All I did was work out what my net profit is, and I know I can work that out because I know that sales minus COGS equals gross profit, and gross profit minus expenses equals net profit. So that's just your 2 steps there, and the answer there is B. Which of the following describes the changes in the gross profit ratio from 2014 to 2015? Again, with those figures at the top, I've worked out what the gross profit is for 2014 and what it is for 2015. Same with the net profit ratio. I worked out what it is in 2014, what it is in 2015, and then you get that answer there, and they've both improved, because we can see with profitability ratios, we want them to be higher, okay? Higher the better. Efficiency, we want them to be lower the better. Now, this question here, for some reason, confused a lot of you, but when we're looking at our cash flow statements, we're looking at the opening balance. The opening balance is what we sort of had left over from the month previously. So in this instance, it's minus 24,000. So you just have to go through the motions. Now, some people worked out minus 24,000 plus 24,000 plus 26,000, minus 26,000, and they were coming out with minus 26,000. We know that's not the answer because there's no option there. But the question says, what is the opening balance for April? So here what we're doing, we've got a balance sheet and we're going to answer questions 9 and 10. What you need to do, we see that there's a question mark here. The question mark means that there's a figure missing because what we have here on the left must equal to what's on the right. So if we add up everything here and we add up everything here, we're going to have a difference, and the difference is going to be that $3,000. So with 9, if Steve is a sole trader, how much equity does he have in the business? Now, I think it should have just been if Steve is a business owner. I think the sole trader bit threw some people off. However, all you do here is add up the 22,700 plus the 12,800, and that's your owner's equity. The current ratio for this business is acceptable, and we know that it's acceptable because if I just quickly go back up the top, we worked out what our stock is. So we can work out current assets over current liabilities. Some of you actually put unable to be calculated because you didn't see a figure for stock. You need to work that out. Now, which of the following statements is correct? All I did here was work out my net profit and work out my accounts receivable, and then I was able to answer that question. So what you need to remember though with your accounts receivable turnover is that you divide the answer by 365. That's the hint they don't give you. Now, with this one, it is D because we know that efficiency is measured with the accounts receivable turnover. So it's D. 13 is D because what's happening here is there's a comparative or there's a comparison here. 14, the expense ratio is always the difference between net profit and the gross profit. Now with question 15, what you need to do here is you need to substitute all the figures here one by one to get the correct answer. So it's a process of elimination. So we know that the gross profit divided by sales is the gross profit ratio. So we can work out what that is by substituting the sales figure firstly, because we have the gross profit number there. So the answer there is D. With question 16, I've got, all I've done here is I've calculated the net profit and the gross profit using my ratios. Now the gross profit is 67%. The question 17 is B. So what we have here, remember how I was talking about times? They get paid 14.63 times a year. So if we want to convert that into days, we must divide 365 by 14.63, and it gives us 25 days. Because if you don't divide it by 365, you might have been at risk of putting question A, which means that you're going to get that incorrect. Once again here, balance sheet, what is the gearing ratio? Total liabilities over total equity for this business, and it's 0.75 to 1. Now, with the first short answer questions, calculate the current ratio of this business and show all working. So it's pretty much 35,000 over 14,000, which is equal to 2.5 to 1. Calculate the debt to equity ratio, show all working. Here again, 34,000 divided by 34,000, it's 1 to 1. And we like 1 to 1. 1 to 1 is our benchmark. So what I've got there for you is just the marking criteria, just so you can see what the answer would be. Why is it important for a business to control its debt to equity ratio? Now, I mean, the obvious reason would be to make sure that they don't overextend themselves and have too much debt, because too much debt means that they're not going to be able to pay that back, and they're going to be at risk of, potentially being bankrupt. So with question 2, this was the 2014 HSC question. Calculate the opening balance for March. And what I've got here is, so here the opening balance for January was 5,000. So you add that 5,000 and then take your calculations over. If you don't see this information, then you're going to miss out on that and you're going to come out with the wrong response. Now, in which month did the business start with a negative cash balance? And that was May. That's when they started. That's when they started with a negative cash balance. Now, this question here is a 5 marker, I think it was, a 5 marker. And because it's discussed, we're looking at the advantages and disadvantages. And what I can see, what I would do here, it says discuss the gearing for Andrew's discount tyres. So the first thing you have to do is calculate the gearing ratio. Then you need to compare it to the industry average. So you're going to calculate it, get a figure. Then you're going to compare it to the industry average, which is 80,000. Then you're going to state the advantages, and then you're going to state the disadvantages. And as we just move a little bit further down, it actually gives you an example of an answer that you have there. So let me just read this quickly. So gearing measures the relationship between debt and equity. So we've got our topic sentence there, we're defining it. The gearing of Andrew's discount tyres is 50%. This can be compared to the industry average of 80%. Andrew's discount tyres gearing of 50% indicates that this business is in a sound and safe financial position. We know that because we want it to be under. We want this ratio to be lower. So if the industry average is 80 and we're sitting on 50, we're doing better than what other people are doing. Some advantages of this is that Andrew's discount tyres business would be low risk and hence would have low debt repayments, and this would lead to lower risk of business failure. Yes. The disadvantages would be that having a low gearing ratio could be that the business may be missing out on using more debt, which could increase to future potential for profit. And this is that old saying of you've got to spend money to make money. So sometimes if you don't have a lot of debt, you might have to put yourself into a little bit more of a debt position in order for you to benefit from that in the long term. Now back to some multiple choice. With this one, it is B. So all you need to do is just go through and understand what a 3-to-1 debt to equity ratio means. Question 2, 53%. All I did was work out the net profit ratio. Now, for some of these questions, you're not going to have ratios because these questions were written when the markers actually gave you the formulas. So you will get the formulas, but for these ones, I've just written it on the side there. Question 3 is A. Question 4 is B. All I did was say the current ratio has gotten better, the debt to equity ratio has gotten worse. So that's what we're looking at there. Question 5, a business sheet includes intangibles. It doesn't include the others. One is a ratio. Question 6, I had B here. So again, all I did was work out my expense ratio for 2001, 2002. Then I worked out my accounts receivable turnover, and I worked that out. So the fact that this went down and this one went down means that they've both improved, because we want to decrease in both of them. So this is where you need to do just a few quick calculations when you get to the HSC, so you don't make these silly mistakes. It's not a guessing game. You have the numbers there. Now, with this question, it is B. So again, worked out the debt to equity ratio and had a look at what the industry average was, which is 200%. And this business is well above, because they're at 300%. And I know that because I worked that out before. Question 8 is D. And what I've just got here for you is to know the profitability ratios: a net profit ratio, gross profit ratio, return on owner's equity, and then the efficiency ratio is the expense ratio. So I just went through process of elimination. Question 9, debt to equity ratio. Again, I've circled the industry average there because that's important. It's going to come up somewhere, and I'm going to have to mention that somewhere. Calculate and comment on house party's liquidity. So it's 120,000 over 124, and you get 0.97 to 1. If you comment, it is well below, because we know the industry average from above is 2 to 1. So it is well below the industry average, which is not a good thing, because it means that they don't have as much money to pay off their debts. Calculate and comment on house party's efficiency. I've just calculated it there for you so you can see how it does become 55 days. Just a simple calculation there. With this question, calculate the gross profit, and the net profit has decreased from 10% to 1% in 2001, and state some possible reasons for this. Now, the reason for this one initially would be that obviously expenses have gone up. If you've gone from 10% to 1%, it means that your expenses have definitely gone up. The gross profit ratio is 40%. That's easily worked out. Just go down here. What is the name given to this type of financial statement? Easy, it's a cash flow statement. I know that because there's cash in, cash out, closing balance. These are all the terms that we get on a cash flow statement. Outline the role. So again, this is simply a definition. Okay, this is where your definitions come in handy. Now, you've got some information there. It gives you a whole lot of dot points in terms of where this business is at and what their figures are. It then goes into looking at outline 2 indicators of problems with effective cash flow management experienced by gigabyte computers. There's an answer there for you. You can have a read through. Truman has inherited some money, and he needs to consider, which am I going to invest in? Is it going to be Margie's Kitchen Shop, or is it going to be Lim's Fabric Store? And here you're just doing a couple of calculations in terms of which one is actually going to benefit him in investing in. So with this question, again, identify and calculate one profitability ratio. This is where you need to know what profitability ratios are. We know that it's the gross profit ratio or the net profit ratio. And then just down here, it tells you if you calculated the gross profit, this is what it would look like. If you calculated the net profit, this is what it would look like here. Now, that's what we have for this recording. I will put this recording up for you as well as the blank copy, but it's important for you to understand that there's got to be a couple of steps sometimes to work things out, rather than just saying, oh, I don't have a figure, I can't do it. there's always a way, because you have to remember those year 11 formulas. If you don't remember the year 11 formulas, then you're not going to be able to do these questions, because they don't give you those in the HSC, unfortunately. So I'll leave it here and I'll see you in class.